started.
Good afternoon. Welcome to the seminar on Art of Wealth Creation. I am Rahul Parikh, head of Aditya Birla Money MyUniverse, and I have privilege of introducing you to one of the investors in India which needs no introduction, Mr. Raamdeo Agrawal, who is joint MD of Motilal Oswal Financial Services and also chairman of Motilal Oswal Asset Management Company Limited. I think looking at the recent past and the way the markets have been going in terms of the news flows which have been happening, I think all around there are lots of questions around what should an investor do, how should one make money in a market like this, has it become more expensive? But we'll keep all those questions at rest because we have the expert with us and we'll leave all for the expert to explain. So welcome Mr. Agrawal. Let me start by asking, you've been in this market for long enough time and you have made money in many companies that were identified well before time. So tell our viewers something about how does one go about creating wealth in this equity market.
So, see, equity investing is simple but very difficult.
Sure.
Okay. So making money in the market is, if you want to make 12-15%, it's very easy. Actually, it is much easier than what it made out to be. But if you want to make 20-25%, it's far more difficult than what one assumes.
Sure.
So obviously we don't want to make 12-15%. We want to make 20-25%. So how do we enhance the equity returns? How do we make a lot of money in the market?
Yeah.
Now there are two things. One is where you invest and where is the market. People are obsessed about where the market is. And actually what you're doing is where you are investing. You are investing in few companies and market is at one level.
Sure.
Now, the movement of the stocks and the markets, they look to be aligned on a daily basis. If market is up, then stock is also up. Most of the stocks are up. And market is down when the stocks are also down. But when you look at slightly longer period of investing, we are talking about investing, we are not talking about speculation.
Sure.
Okay. So when you are investing, say you invested something in say HDFC Bank in 95-96 when it came out.
Yeah.
So it came out at about 800, it was 40 bucks, so 800 crores. The total bank you could buy for 800 crores. Today it is 3,20,000 crores. So how many times it has grown? It has grown at least 350 times in this period. Now markets are not grown at 350 times. And then on top of it, they have given a lot of dividends also.
Correct.
So clearly, market must have gone up by 5 times, 6 times, whatever, or 10 times at best. But clearly, there is a difference between market and stocks.
Sure.
And so is the difference between portfolio of well-chosen stocks and market.
Sure.
So you leave the market one side. Market will never give you 25%. Market at best will always give you 14-15%. And we don't want that machine. If you want 14-15%, actually you must not waste your time. Just go and buy Indian indices and stay on for 5-10 years, 15 years without paying any cost, without any janjat, you will get your 14-15%. Because in the last 34 years, markets have given about 16.5%. Forget about 15. You will get it if you stay long enough. But we want to make 25%. So how do we go about it? So we have to choose the companies which are going to make a lot more money in the next 5, 10, 15 years. And how do you find those companies? If you find a company which is going to make, which is today making 100 crores, and it is going to make 1,000 crores in say next 10 years, 25% compounded.
Yes.
Okay, should that company make money for you? Definitely. And if you have a portfolio of about 20 companies like that, do you think the whole portfolio will grow 10 times? That's simple. Okay. That's the basic architecture of our QGN. Now, how do we, the portfolio management, okay. Now, how do we find the stocks which will go 10 times in 10 years? So, we have to start with the QGIP process so that we don't miss out anything.
Sure.
We have to see all 360 degrees of the company. Okay. And this I have understood after 35 years in the market, that what all is to be seen. I've read books and books, maybe 100 books, 150 books, and from there we have called out what all is required to be seen in a company when you are looking at a company. Now, trying to make it simple, but Q, the quality of company has to be fantastic. Now, what is quality in this? Good business run by good management.
Yeah.
Okay, that's the first thing. When you are starting to find the company which is going to be 10 times, I mean the winners. So how do you find the winners? First you look at the quality of business. What is the quality of business? So the business which earns a lot of money by deploying less money. So you can earn a lot of money by deploying a lot of money. You put a lakh crore at 10%, you will also make 10,000 crores. But the real fund is earning 10,000 crores by deploying only 10,000 crores.
Sure.
Okay, or earning 100 crores by deploying 100 crores. By deploying 1,000 crores, if you earn 100 crores, any bank account can give.
Yeah, correct.
So that's not a business at all. So the good businesses that earn money by using very little capital and lot of brains. Okay, so we have to find the businesses which have huge entry barriers for anybody else to get in, and it requires little capital or no capital at all and makes a lot of money. And keeps making this at 100 crores, then 125, then 156, then 200, like that.
Yeah.
And it requires very little extra capital to make money. You would love to have those kind of companies?
Sure.
So that's a good business. Okay. Now, so we have taken care of business. So something is approximately like that, the businesses. Then terrific management. What is terrific management? There are three qualities of terrific management. The guy has to be competent in what he is doing. If you are running a car, you know, the driver has to be good. You can figure out good driver and bad driver.
Yeah.
He can be sleepy, he can be sloppy. So you need a very sharp driver. Okay, very good driver, competent. Then he has to be intelligent. Sorry, he has to integrity.
Integrity. Yeah.
Okay, a driver who defrauds his fuel bill. You know, he takes 5,000 rupees from you and puts only 4,000 rupees fuel in this thing. How far that driver will go? Someday he'll be caught.
Correct.
And he'll be thrown out of business. So we want management which is competent and honest, trustworthy and competent management.
Yeah.
Then third is the passion. The guy should be raring to go. Absolutely. Tell me sir, 8 hours, no, 10 hours, then 15 hours. So he has to be very passionate in businesses. Okay. So we have terrific business and a management which has these three qualities.
Sure.
Okay, competent, intelligent and passionate, growth mindset. Mukesh bhai, I mean, he has made so much of money and yet he is dying to kill everybody.
Yeah.
So this is not about making money, it is about the passion to do business, isn't it?
Yeah.
To take so much of challenge, it must be a massive passionate mindset. So you need that mindset.
Yeah.
He's very rich.
Correct.
So but he still wants to run. So good business, good management. 99% job is done. Unless both these two comes, we don't move.
Sure.
There is nothing else to see.
Sure.
Then we look at the growth. Okay, is it a stagnant terrific business? Say a doctor's dispensary is there, where the doctor is very good and clients are very good. How much is making? 10 crores is making in a year. After 10 years, how much is making? Again 10 crores is making. What is the big fun?
It's growth.
Growth. So we want a dispensary which earns 10 crores this year and 100 crores after 10 years. Okay? So we want the businesses which are going to grow. Now, third is how long it is going to grow. See, there are businesses which will grow for 50 years, there are businesses which will grow for 2 years, and after that it might just decline.
Yeah.
So we want longevity growth. Say banks typically, say like HDFC Bank from 96 till now, for 21 years it is growing at about 30%.
Sure.
So we want the businesses which are going to grow for 5, 10, 15, 20 years. And then I can be sitting. I buy today, for 15 years, 20 years I don't have to do anything because the damn thing is just growing.
Correct.
So you have a quality of business, you have quality of management, you have growth, and you have longevity growth.
Sure.
When these things are done in the same order, then we look at the price. Because these numbers are going to be different.
Correct.
So, say iShare for last 5, 6 years growing at 70, 80%. Now, then you have to have understanding of power of compounding.
Yeah.
What happens power of compounding? A lot of people, they know about power of compounding, but they don't know how to use it. And they don't realize what it takes to use it. Okay. So, so a company is making 100 crores today, at the rate of 25% compounded, in 10th year, it is going to make 1,000 crores. But to earn 1,000 crores, you require that management capability. That's why these large multinationals, they are very good. They can make 50,000 crores and still nothing will happen. So you need the management team which can do a big thing. See, a banking license given to me and banking license given to say HDFC.
Yeah.
These are two different things.
Sure.
The way HDFC can exploit it,
Correct.
I cannot exploit it. You give me insurance license, I can also open an insurance company.
Yeah.
Can I be HDFC Life? I cannot. At least I think I'm very sure that I can't be HDFC Life.
Yeah.
So you see, so you have to understand in 10th year to earn 1,000 crores, does he have the competence or not?
Yeah.
And is that opportunity like that? So all these subjective, objective assessments are being done. And when we realize, yes, here is a company which can actually grow at 25% for 10 years, and today it is available at say 20p or say 25p also.
Yeah.
We will make about 25%. The formula is you make only as much money as much as the company makes it.
Sure.
Okay, so if the company is going to make a 25% compound for the next 10 years, I guarantee you, you will make in that individual stock either 23% or 27%.
Sure.
If there is a re-rating, you will make 27%. If there is a de-rating, you will make 23%. So like that, you choose 20 companies. So somewhere you make 30%, somewhere you make 27, somewhere you make 23, somewhere you might make 15, 16 also. So on an average, depending on the mood of the market for next 10 years, we will make somewhere around 25, 26. That's the desire. That's how we manufacture. But we'll promise you 15% only. We'll always tell you 5 years double. Okay, you expect 15%, I'll manufacture for 25. The thing may fall somewhere in between. You know, but we'll make 20, I mean, the 39 strategy of value has given 25%. Your NTDOP has done even better than that.
Yeah.
Our very recent say F35, which is the largest mutual fund, has given 35% compounded, but it's only 27 months.
Yeah.
So when you apply this process and practice it well, there is no reason why it will not make money.
Sure.
You know, I mean, it's not in the process. It is in the how determined you are in practicing it.
Correct.
The clarity is totally there. See, if I buy some company which is going to grow at 25% and actually it doesn't grow, or it actually declines, then my job is to throw it out and find something else and put it.
Sure.
If I don't do it, of course the portfolio will suffer. And for that only the clients pay us.
Yeah.
You understand? So,
Sure.
what you will understand, the clients will understand.
Yeah.
Okay? So, this is the process, and it is nothing to do with what is happening in the marketplace.
Yeah.
So, I don't care what is the job report today in the US. I am also listening. I also want to be aware of the global economy, local economy, what's happening in Delhi, what's happening to the climate, what's happening to the commodity price, what's happening to the food, everything I'm interested in. Yet, on the basis of one big thing, say China or America and all, we can do nothing about the portfolio.
Sure. So let me ask you, as I understand what you're saying, is equity is about buying businesses.
Yes, you're buying pieces of businesses.
Correct. Now, one of your philosophy has been, buy right, sell tight, and you also spoke about longevity. So, if you can help us understand how does one identify a business for next 25 years? How does one know that how large is that opportunity? How would the business capitalize? And whether the management itself will be there for 25 years running it?
Yes. So you are asking whether, how do you identify businesses for 25 years?
Correct.
Okay. Say, I'll give you an example. Say, UNSP, United Spirits. Okay. This is about liquor.
Yeah.
Okay. This liquor is one of the oldest business in the world.
Yes.
It might be known for 2000 years or 1000 years.
Right.
So liquor is liquor. Okay. There is no online way of drinking. Can you get drunk online? No. So you have to open a bottle and get drunk, isn't it? After 10 years also.
Yeah.
So the issue is that if the business is going to be the way it is, more or less, liquids will be required. In that case, who is going to supply? Then next thing is, if the business is going to that, then the very next question is, how is the competition? There are only two guys in the world, in India also, Pernod and UNSP.
Sure.
UNSP does 55%, the other guys put together they do 45%. So his dominance is the world's biggest and most reputed spirit company, with all the brands in their pocket. Okay, they know how the consumers behave. So will they be there in 25 years henceforth? That's my call, that they will be there.
Sure.
Will they be profitable and growing? I say yes, but I mean, what is the reality? That only time will tell.
Sure.
So what I'm saying is that you have to again go to the QGLP. Once you have found an opportunity which is going to be there for next 25 years, then you have to go through the process of QGLP.
Correct.
And And that understanding of 25 years or 50 years or 10 years, that comes from understanding the business. Say you are, we are talking about say an Amul kind of company or Nestle.
Yeah.
You know, milk. I mean now, I don't know. I mean, milk is there in our. I mean, it is there for thousands and thousands of years. So processed milk will be used. Branded processed milk will be used after 10, 15, 20 years. 25 is nothing. You look at what we are all 40, 50 years old guys. What we're using 10 years, they have 10 or 5 and all. The same damn thing we are using it.
Yeah.
What is different? Nothing. So 25 years looks to be very long. But it's not that. I mean, banks were there. Earlier we used to call it State Bank, government, now it is HDFC Bank.
Yeah.
But they're all there. So
Sure.
bulk of the things, except for the tech, companies around technology, they
Yeah.
only change, rest all remain same.
Hmm.
You know?
Sure.
So you have to find those businesses.
So which interestingly brings me to my next question, is that the examples that you gave about spirits, about milk, I mean these are where demand is already established and you know that human population is going to use that. But talking about technology or talking about sunrise industry, does this framework help you to identify even the sunrise
Yes,
industry?
the same framework. Same framework, and when do you understand the business? That's the key issue. You know, say like insurance. It's now insurance. People have not made money out of insurance. It's a new business for India. Insurance is known all over the world.
Yeah.
There are giant insurance companies in the world, but in India it's a new because it was under LIC and now they have deregulated 10 years back, and now you've got new insurance companies. So they are compulsory going to come out with a public issue. So already 40-45% of the or 50% of the insurance market in India has gone to private sector. Within that 50%, you have now Max Sun Life will become 20, I think the largest, I think 12-13%, and ICICI will become another 11%. So like that, just these two will be almost half the private sector and growing and nibbling onto LIC and all. And the market itself is growing, and there is no alternative concept of protection. Mankind doesn't know anything. I mean, this is a huge innovation in financial services.
Sure.
That you can get protection for very small sum. So I think this concept will continue, and well-run insurance companies will make money.
Okay.
So you have to find well-run insurance company at reasonable price.
Sure. Talking about quality, Raamdeo ji, how do you identify quality of management? You gave us 3 parameters. However, in management meetings, how do you go about assessing the quality of management?
It's a challenging task. It's not easy. It comes out of experience and the mistakes we have committed in the past, where we believe that it's a good management, but actually it turned out to be a fraudulent. So we also keep committing mistakes, but it's all probabilistic event. I mean, if I interview now, because of my experience and what of frameworks I have and experience I have, maybe out of 100 interviews, 90 will be right, 10 will be wrong. Somebody else will try. First thing, they would not know the framework, and hence their probability of success ratio will be 50-50. 50 will be right, 50 will be wrong. But somebody will be so bad that his thing will be 1/3 good and 2/3 bad. So my sense is because of experience in the frameworks and what to ask for at that point of time, what to look for. I mean, many times we do very funny things in terms of understanding management. Like say toilet audit. You know, you go to a marketing company or some company which is fancy company and you find that toilets are dirty. You know, or they're not treating their small employees very well. What kind of company is this?
Sure.
You know, so that tells the character of the company.
Yeah.
So you can draw from anywhere. That's why I like to visit the companies. I mean, howsoever small company, I would definitely like to visit before investing, or even if it is invested after that,
Sure.
so that they will treat me well. But how they are treating their own small guys,
Correct.
that decides because minority shareholders are worse than the peons of the company.
Correct.
You know.
Yeah. Interesting. Just coming back to the point of investing, how much of investing do you think is art and how much of that is science? So you have years of experience, so you have the ways and means to find out this, but how much of that is a science?
I don't know, I mean, how much is what proportion to put, say 50-50, but it's a huge proportion in the sense that there is no lack of maths. This power of compounding I'm talking about, calculating the number. I think you have to do your spreadsheet. There's no getting away from that. But that spreadsheet you can do only when you have understood things, you know. The art of understanding a business, art of understanding a management, art of understanding what you understand, what you don't understand. So that's an art part. Okay. Then you have to do your spreadsheet, and then it's maths. See, making money in the short run is a speculation. Okay, you have to be lucky, you have to buy at the right price,
Yeah.
you have to be simply lucky to make money in the short term.
Sure.
Okay, we are not in that game. We want to make serious money in the long run. And
Sure.
serious money in the long run is the maths. As much the company makes, you make it.
Sure.
So what I have to figure out is how much the company is going to make. And there it is unemotional. It's completely maths.
Sure. So talking about what the earnings of the company which will drive the returns that one makes, what's your current assessment of market? Do you think it's run ahead of its time? Will earnings pick up? What's your general sense on the valuation?
It's a buoyant market, but earnings are depressed. So this so-called talk about P multiple being high and all, I think it's all misplaced. In an environment where we are seeing global deflation, local interest rate very rapidly coming in, global capital markets, Indian capital markets merging through masala bonds, a lot of issuances, you see the continuous yields dropping. So when the world is largely at no interest rate situation, we are at 7, 7.5. So I think we deserve to get a much lower interest rate. That will be 4, 3, I don't know. So in that situation, to talk about earnings P multiple of 22, 23, which is earnings itself is depressed. So I would think the seasonally adjusted P multiple would be more like 15, 16. It is not too high.
Sure.
Now, how earnings will grow, how fast it will grow, when it will grow, which sectors will grow, that's all a matter of seeing the future, which we can't see.
Sure. Recently I read your article which mentioned also that FI monies are going to be at least there for the
It's
next
going
1
up,
year.
yeah.
And you believe that's because overall the interest rates in those countries are low.
Yeah.
Just talk us through that. I mean, why do you feel that FI money is
See, the world is becoming one bucket. Okay, Japan, Europe, America, all these developed countries which are almost 2/3 of the world, they are in negative interest or barely any interest. I mean, they are looking for yield. All the pension funds are going bust because they are not able to pay to their defined benefit guys. I mean, they are saying that, boss, I had promised something and we are finding it difficult because our investments are not earning those yields. Okay, so they are looking to somehow earn a little more money because there is no fundamentally risk free, there is no rates. So, so that money is finding way to higher yield, say emerging market bonds or corporate bonds. Say masala bond issued by HDFC.
Yeah.
So they issued at 8.33. Now they are saying that they will issue at about 7.5, 7.60 or something like that. So continuously the high yield bonds are coming down. Now once the debt money comes down in terms of yield, where will you go? Today nobody puts money into equities in India. Why? Because they are able to get 8-9%.
Correct.
Now how much you are able to give? You are the guys who are managing their money.
Correct.
How much can you give 5% post tax or 6% post tax? It's becoming very challenging to get 8-9% post tax. So as it comes to 3-4%, we will see a lot more money coming.
equities.
Yeah, equities from the domestics and foreigners. In any case, they want, because their cost of money is 2-3%. My cost of money is 10-12%. When the 10-12% comes to 5-6%, so I will be in the same bucket where the foreigners are. So they are buying, we will also buy. From where will the stocks come? And we have to buy the companies who are not going to issue the stocks.
Sure.
So who are perpetually in short supply.
Correct. Interesting. In the market currently, what's your assessment? Where do you see the value? Do you see value more in large caps, mid caps, or one needs to
We
be
are cap
invested?
independent. Okay, we can find values in 1 lakh crore company, 2 lakh crore company, and 1,000 crores. It all depends on what is the piece of art, which is the company.
Sure, sure. Also, you've spent so many years into the markets, and you mentioned some time back that there could be some mistakes that you've made and you've learned. Talk about some of the mistakes that you've made and what have you learned for our investors.
We'll see, buying bad businesses. See, initially when we started in 85, 86 and all, that time we didn't know the concept of good business, bad business. Only EPS didn't matter. EPS and PE. There were only two ratios we knew. Okay. Then we started understanding the difference between cash flow and profit. And then we started saying ROE and low ROE and high ROE. I mean, if you're earning on 1,000 crores, if you're earning 5%, you still make 50 crores. But on 1,000 crores, if you earn, say, 50%, you make 500 crores. So there is a difference between these two,
Sure.
And then we learn the concept of growth capex. So there is a lot of learning every year. Even now we are learning.
Yeah.
Even now some of the basic concepts are being clarified. So, I mean, at every level we have committed mistake. We have bought useless companies, useless businesses, useless managements, fraudulent managements, and we paid fancy prices.
Sure.
So, I mean, I don't want to name them, some of them will feel bad because
Sure.
we're talking about the failed ones. Good ones will talk.
Yeah.
We had, a whole lot of accidents. So, what has happened is that when we were in 80s, when we used to lose out say 50,000 rupees, a lakh rupees. Then in 90s, it was few crores. In turn of the century, say 5-10 crores. Now we're talking about losses of 50 crores, 100 crores. Those kind of losses. As we go forward, if we deploy 15-20,000 crores of client money, the losses could run into 500 crores, 300 crores single losses.
Sure. So the reason I asked this question, Raamdeo ji, is that a lot of people, at least in Indian context, are great savers. They earn very hard. Their income levels are good, but they are mostly saving. They are putting the money into areas which are not yielding probably even better than inflation. So what would be your advice to investors? Because risks are there, and if one is getting into equities, it's important to be clear about the risk that one is getting into. But at the end of the day, the purpose why somebody gets into it is wealth creation or making money. So what would be your advice to the retail investors to see that you know the risks which are there, but how do you kind of still manage to make money in this market?
See, understanding what is the risk? The risk is permanent loss of capital.
Correct.
If I give a crore, will I lose it forever or will it become 25x forever? That I am scared for myself and I am scared for the client also.
Sure.
I am scared 10 times more for the client because God has blessed me. I have made money. Even if it goes to 25%, I am still rich.
Sure.
Okay. But I don't want to see that any client loses even a penny from you.
Correct.
Okay. And that's why QGL. See, quality doesn't allow you to sink permanently.
Yeah.
In a growing economy, if you have a Nestle, even if you buy expensive, it may take 5 years to come back, but it will come back. You will never allow, it's like a boat, it's a large boat, it will never sink. It may not take you forward, but it will not sink.
Right.
And growth makes sure, Q and G, growth, see, Q will not allow you to sink, and growth will not allow you to stay there. 100 crores, 200 crores, 300 crores. How long the boat will not go up? See, you buy a 100 crore company, 100 crore earning company,
Yeah.
say 25p. Okay, next year it earns, say 200 crores. It can become 12.5p. And the price remains same.
Yeah.
Third year it earns, say 300 crores. Now it has become 7.5, 8p.
Yeah.
Then fourth year it earns 400 crores. It becomes 6p. How long will it stay there?
Sure.
Finally, when it will make 1000 crores, it will go to 2500.
Yeah.
In 1 year it will cover that.
Sure.
So the Q will not allow you down and G will make sure that you keep rocketing. The only thing is don't pay exorbitant price. That's why we have said reasonable price. We will not buy cheap ever.
Right.
Very rarely. Is that clear?
Yeah, it's
That's
very
a
clear.
very good question. People must understand.
Sure.
Yeah.
Talk us through some of your investments that has kind of been multi-baggers, and how did you go about identifying those business? For example, one of your favorite examples have been Hero MotoCorp. So talk us through how did you go about identifying the multi-baggers?
So if I can remember well in 95, two-wheeler boom was going on. Like people were just catching up to buy motorcycles. It was fuel efficient motorcycle. So the business was good. The demand was massive. There was 3,000, 4,000 rupees premium on getting the bike. So when I saw that there is so much of supply shortage, and there is a premium running, and so we said let's look at who is the biggest and the best. So Hero plus Honda.
Yeah.
So management you don't have to bother. You can't go any better. Honda is world number one. Hero is world number one. India number one bicycle manufacturer and very reputed.
Yeah.
So management is fantastic. Business was fantastic because it's short supply.
Yeah.
They were 1,000 crore company earning 100, 150 crores and growing every year by 30-35%. And they were hitting the Bajaj, who was a scooter manufacturer. And the whole market share was migrating from scooter to motorcycle. In 7 years, see, that time we thought that we'll double the money in 3 years. We didn't know we were going to make 100 times in 10 years.
Yeah.
So we bought it about 800,000 crores kind of market cap, which became now, it is about 70,000 crores. But this sends so much of dividends. This management has been fabulous in paying dividends. 60%, 70%, 80%, 100%. Just with loads of dividends it came. So from the money which came by way of dividend, how many things more you bought?
Sure.
So,
Interesting.
the wealth, it's a multiplier, multi-tier kind of wealth creation out of one successful affiliation.
Sure. Viewers also have sent us some questions. Let me ask some of them to you. What is your current assessment of market? Do you see that all the factors which will lead to a long-term bull run are already in place? Do you think that an investor should look at next 5 to 10 years as a...
It's a very normal market, nice, 12 o'clock, 24 degree, go and do shopping. It's a very normal, nice market. Neither depressed nor, opulent. Very, very normal market. 75% of GDP. Your GDP is about 150 lakh crores. Market cap is about 110, 111 lakh crores. A perfect market. Falling interest rate, falling oil price, current account deficit, fantastic new government trying to do ease of doing business. Everything is new, except for the earnings are being somewhat depressed because it's a cyclical upturn.
Sure.
So this is a nice time to build a portfolio.
Sure.
But don't forget your QGLP process.
Sure.
It's just that you cannot enter. See, market is patchy right now. There are very large portion of the market which is not doing well and may not do well. So you have to clearly see in telecom you see the kind of carnage which is on.
Yeah.
The ultimate market in the sense that today you cannot live without that. Everybody's pocket would have one smartphone working, and yet making money out of telecom is becoming so difficult in India. It is a carnage of, there's a blood on the street on telecom. So you have to avoid these kind of situations well in advance. So there are a lot of patches of the market which are not in good shape and may not be in good shape. There are very few spots which will be good. So you have to see that you bring, so it's like a IIT exam where say 4 lakh, 5 lakh kids they appear.
Yeah.
But there are 50 kids
Will
who
pass.
get it, no, pass will be for 4,000. But there will be 50 kids
Very-
who will be in the high rank,
Yeah.
who will get computer science IIT Mumbai. They are world beaters. We want those 20 out of those 50 kids.
Yeah.
You get it?
Correct.
Yeah.
Interesting. Again, one of the other questions which keeps on coming is at this point of time, from an investor's perspective, what would be the best way to enter the market? Should he, given the recent rise in market, wait for some time? I know your views that timing is not a
You know
good
my
thing.
view.
Yeah.
Tomorrow morning, do your puja part and get into the market. That's the best way. But if you're scared, whatever tranches, SIP, you guys are smarter than. Who can be smarter than you guys in terms of pulling the clients? But if you ask me, tomorrow morning 9 o'clock is the most auspicious day.
Interesting.
Yeah.
I also read somewhere that you mentioned that GST is a credit card equivalent for the Indian economy, and it's a long-term value driver for us. Just talk us something about
Well, I didn't say that. You got it much better. But see, GST is a revolution in the sense that we don't pay any taxes actually. Our tax collection is so bad. We keep complaining about development. How will government spend if you don't give taxes? 10%, 11% of GDP for last 10 years. We become so rich, yet we keep paying only 10, 11%. So the tax to GDP must climb to 14, 15%. And I think there is a possibility with a good implementation of GST. Now, GST has to be implemented. Parliament has given us a constitutional approval. Now, if you keep doing 22, 24, 25%, 27%, who's going to pay taxes? There will be a lot of leakage. So they have to be reasonable at maybe 18% or 70%, whatever authorities they find it right. And they implement it well. If the authorities on the ground, they don't help the SSCs evading the taxes, but they help them paying the taxes.
Sure.
There is no reason why we will not have a fantastic collection of taxes. And once the indirect taxes are there, my sense is the real kicker will be the direct taxes. And combination of these two, I think 17, 18, we should see a very good inflow of taxation, and that will allow the government to take up ambitious investment program.